you're executing the trade. Then you place your stop losses just above that key level. Then the market consolidates for a while, then spikes up, sweeps the stop losses above that trade, then flies down to your initial direction. It is very painful. Well, in this video, I'm going to give you a few tips and how you can manage trades like this and how you can enter better. Look, I'm not going to ask you to enter when the market sweeps these highs and stuff. No, I'm not going to ask you to do that. What I want to say, however, is when the market approaches, or when you have a key level, especially key levels like this, and you're certain that this market will tap this level and drop at least a few pips, use a sell limit. Place a sell limit there. There's no need, if you have to look, if this market doesn't hold this level, either way, you're still going to lose money. Do you think this market will just come here and just pass this level? Go and check your charts. There's no way you see this level like this and this market will just come and pass clearly, or maybe because the market never had plans to reject at that level. The market will just pass and you just watch the market pass and be like, oh, the market was not about to stop here. Then you are looking for buys from the other way. Nah. The market will come there, induce you to enter that trade. Then it goes up to take your money. It wants to take your money. It will make sure that you enter this trade. It will come here, fly down. You see, like, wow, I'm late. Like, you just jump in, boop, place orders, and immediately it flies up. It's not just going to come and pass like this. And so what I'm trying to wrap up here is market execution is very, very detrimental. Unless you are somebody with huge risk parameters, like you can put stop losses above swing highs and you're okay with it. If you're okay like that, then market execution is for you. But I just want to let you know that if you have to lose that trade, you will still lose. So why not enter like a pro? Meaning, if you have a level like this, instead of waiting for a candle to reject, look at the gap at which you are entering. Look at this space, all of this gap here. You're entering down here because that's where the engulfing candle closed. What about somebody who enters his trade like he just plays a sell limit exactly at that zone? Then now you have more room for your stop loss because you've placed a more advanced, like, guys, look at this. Let's say this level was not to hold. It will still come and do what it's doing, pass and stop you out. Either way, you still lost. Even if you enter here, even if you enter down here, you still lost. There's no way, there's no 100%. There's no better way to do it. You just have to choose one. Me, I choose this one. If you watch my first video, the first video I dropped on this channel, I said it. Market limit orders are very, very important. It has a great role to play when it comes to risk management. Better entries, larger stop losses. Like, chances for this market to come up and stop you out here is hard because you entered early. You also have good risk to reward. 1:2. Your take profit is around this swing low here, and this market is most likely to hit it. But if you're entering down here, this engulfing candle, placing your stops like that, even if this trade is working well, it might just reach here and bounce back up. Like, it's just hard to manage trades like that. So I'm encouraging you to go to your charts, back test it, try using limit orders. Let's say you have a level here, the market bounces off once, bounces off twice, and you keep using limit orders, and the 2 times the level bounced there, you close those trades profitably. Then the next time it comes there, you still place another limit order, and then it breaks through and stops you out. You've lost. But now the market has shifted structure. But before losing, you have made a bulk of the market. Okay, let me show you some real life examples. Let me show you my charts so we can go through some examples. So first, here I am on a daily time frame, looking for the overall bias for this market. Clearly, you can see the market is bearish. We don't have to over check. You're just looking at this swing here, this swing low here, this swing, this particular leg. This is what we are interested in. This is a whole, I don't know how many weeks this is. This is a very long time. So that is a downtrend. So I'm just going to head now to the 4-hour. This is where we draw our key levels and execute. Okay. Now, I already drew these levels. Let me just start from up. Let me see. Let me just take from here, guys. I don't want this video to be too long or extremely long and stuff. So I'll just take it from here. You can see that Market came here, consolidated for a bit. We don't really care about the consolidation. Now, when the market broke, or let's just assume the market was consolidating and we had some kind of support here. Just look at the kind of trades you'll be getting, guys. Imagine you had to wait for an engulfing candle on this trade, here, this one, this tap. This is where you'll be entering. This is where your stop loss will be, just below this level. That's where your stop loss will be. Then look at where your target will be. So what are you targeting now? If you're looking for 1:2, you cannot even get it. 1:2, you can't. You cannot get 1:2 in this market. Look at that. Okay, now let's say you entered, you just placed the limit order here and be like, oh, okay, it is what it is. If it works, it works. If it doesn't, it doesn't. Either way, you're still going to lose money in the market. Then you're looking for 1:2. You see that you can achieve that. It's very easy. 1:2, look at that. It's very, very easy. Boop, you're out. Money. It comes again, you do the same thing. Limit order. You don't give a shit. You just put it right here. This is the entry. This is where the market tapped. You have it right there. Boop. Stop loss. Just below that zone. Very, very, very close. Like that. If it's not to work, it's not going to work, guys. Nothing's going to make it work. Not even prayers. There. 1:2. Very, very realistic way of trading. You feel me? You still take the risk. Trading is risky. There's no way you're going to say, okay, I've reduced my risk. The only way to reduce your risk is to reduce the amount of money you put per trade. That's all. There's no way to manage it. Okay? It comes again the third time. You still place another limit order. You're not waiting for engulfing candles. Because you're waiting for engulfing candles. On this trade, this is where you would have entered. On this one, this is where you have poor entry. So when the market now start putting you in drawdown, you start having all this mental breakdown, emotional, like you're just too emotional. You're just worried, you're disturbed, you're closing trades before time because you are deep in drawdown, like you're suffering. You feel me? So I'm just here to encourage you guys to, consider using sell stops, buy stops, sell limit, buy limit, whatever. Just avoid market executions. Look at, we've got 3 trades there. Then the 4th time that the market comes back, we lost. But at what cost? Look at this. We've banked like 6 hours there. Very good. Then the market breaks over. We have now this key level. Now we're using another market execution here. Sell limit. We just place our sell limit there. We're not waiting for any stupid engulfing candle. We just place it right there, perfectly at that level. We just put it there. Entry, like that. Sorry, this is not the entry. The entry is at this low. This candle, this weak low. We're looking at this low. So I'm making sure that the market taps in this low. So just imagine entering on this week, then seeing your market running in profit. You're just going to feel like one pro. You feel like a professional in action. You feel me? If it's not to work, it won't work. It won't work. And here, this style of trading even reduces the amount of money you're staking. It's going to reduce your stop loss massively. It's going to reduce your stop loss drastically. But if you're entering on market execution and you're looking for huge rejections like that, you're going to miss out a lot. Okay, let's say that level is that. Then we see this strong push and we also highlight this level as a key level to trade from. We're highlighting that. Perfect. And we're taking what? This. Look at that. Just keep it on top of that zone or just a bit. Look at that. Look at that. You're waiting for market execution, the entry down here, and the market still has to pull up. It's no way, it's not just going to reject and you start feeling all no. It's still going to pull up. It goes on and on, guys. Like, why? Why would you even wait for engulfing candles? Look at this one. Perfect. Boop, you have a trade. You're in, you're out. Keep your targets just on top of that zone. You can do that. You can aim for 1:2. Easy. Same thing here. 1:2, easy. 1:1.5, 1:1, whatever you're trading. You can manage your trades or whatever you're doing, whatever you're comfortable with. 1:2, easy. Easy. 3rd time. Just imagine making money 3 times at a particular, just using just one key level. You've taken 3 profitable trades from one key level. Do you even know how good that is? This is an example of what I just showed you in the video. This is a trade I'm currently in. As you can see here, I had a very, very perfect entry. This red arrow right there. Perfect entry. That is what a limit order can do. Subscribe.